since that they are some of the key points. But yes, on that note, let's quickly get on board with our next guest of the show to talk more about markets and, of course, what lies ahead. We have with us Vaibhav Sanghavi, who's the CEO of Ask Hedge Solutions. Vaibhav, good morning. So good to have you in. From the past 2 weeks, we have seen markets pretty much remaining range-bound. Even today morning, we have had a quiet start. So no major action after the results season. So what are your thoughts on the current market setup?
I think it's two ways to look at. One, of course, after the good earnings season, probably some time to consolidate, but also a reflection of what's happening from a global standpoint. As you rightly mentioned just a while ago, I think markets are eagerly looking forward to, or probably glued on to, what's going to come from the Middle East in terms of the sanctions. And at the same time, the US bond yields, which has been worrying the markets of late, which is why we've seen some amount of risk off kind of happening from a global market standpoint. So I think these are the two things markets would be watching closely to kind of see how it kind of shapes up, at least in the immediate term. Having said that, I think looking at where our growth prospects is, where the numbers have been from a macro standpoint, the quarterly results standpoint, the valuation standpoint, as been supported by the FCNR flows. I think from a medium-term perspective, I think looks pretty constructive.
Okay, got it. You did mention about the FCNRB inflows. Of course, it's been exceeded what the market was anticipating. How does that make you feel about the banking stocks, particularly for private lenders when they haven't really performed well in the June quarter?
No, of course, I think FCNR deposits, I think, is a very big positive, probably because you get deposits which are 3 to 5 years and at a much cheaper cost as well. So overall, from a medium-term perspective, from an earnings growth perspective, I think it's a positive, and it kind of enables them to do elevated credit growth as well, because in some ways it kind of takes care of your deposits. Now, having said that, in the immediate quarter, of course, there would be some amount of pressure on the NIMs purely because it's not that you get the money and you immediately deploy, right, in terms of the credit. So there can be a lag or some marginal dip in terms of the NIM for the quarter. But I think the state will definitely look through it. And from a medium-term standpoint, it looks great, especially when you are at the valuation band, which is at the lower end, from a longer-term averages as well. So the risk-reward ratios are pretty much in place, at this point in time.
Okay, got it. Now, all of these inflows and FCNRB was introduced as a measure to calm the rupee's free fall. Today morning, we have seen that rupee has edged up higher by about 6 paise. But it's largely remained in a tenterhook around that 95 to 96 range. Do you think that this range is going to be the new normal?
My sense is basically once this program gets over, and it is probably then we will have to take a call. In my view, I think from a balance of payment perspective, current account deficit perspective, or probably trade deficit perspective, I think they are pretty normal, and I'm not seeing anything out of whack here. So once this whole program is over, especially FCNR program, then we will have to probably watch for some time to see where the rupee is headed. At this point in time, it does look like that it's kind of stabilizing around 95 levels. Possibly, if the FPI flows kind of start about coming back to India, then some amount of appreciation can be possible. But my sense is I think RBI should be comfortable if they are around 94, 95 levels, but I think it remains there at least, from a longer term standpoint to give that stability.
Okay, got it. Vaibhav, since last week, we have seen that US bond markets have been on a whiplash. 30-year treasury yields, they are back above 5.2% mark because investors are worried about how deficit keeps reaching record highs. Does this concern us?
Of course, it does concern. I mean, it's not only concerns us, but the global markets itself, right? So the moment, and we always say that whenever probably US kind of sneezes, the world gets cold in that sense. So if there is any problem in terms of, or probably some amount of worry, or the bond yields starts to tighten up. Global bond markets is a huge market, and there can be some amount of collateral damage, within the other asset classes as well. But having said that, I'm not jumping to that conclusion at this point in time. We will closely monitor and see how they kind of shape up and probably how the interest rate scenario kind of shapes up as well. In my view, I think the days of softer interest rate, looking at the current inflation environment, is looking a little tough, both from a US perspective and India perspective as well. So probably time to harden the interest rates is what looks like from here onwards.
Okay, got it, got it. Vaibhav, now there's a double fold combination. We have US yields, which is firming up, and then dollar has turned weaker. Now, a higher bond yield isn't good for foreign inflows, but a weaker dollar, that improves the currency adjusted returns. So, what's the situation now? Should we be concerned after getting 2 months of net positive inflows from the FPIs?
See, I think FPI inflows, I think, are a factor of lot many things. And if you see from the last 1.5 years, I think we've seen consistent outflows happening for various reasons, including your valuations, including your expected net return from a foreign investor standpoint as well against your other global jurisdictions. Absence of AI trade, and probably earnings growth, which was a little bit subdued as well. So what has also happened is because there is huge amount of shift which has happened from countries like India towards China, Taiwan, and Korea, and which is why we've seen great amount of underperformance. Having said that, out of all the pain points which we have seen in the last 1.5 to 2 years, most of them are getting sorted, including currency getting stabilized, the earnings story looking like pretty strong, valuations coming at lower end of the or longer term averages. So I think the parameters are looking good, and an anti-AI trade, in a overall portfolio basket, has to have some amount of exposure. So in my view, I think from here onwards, we will continue to see a decent interest from an FPI perspective towards India.
Okay, got it, got it. Amidst all of this, we have seen gold and silver. They have gained traction, even crypto for that matter. Last week, we saw crypto delivering about 23% returns. So what are you penciling going down the line because of the elevated bond yields? Do you expect other asset classes to gather traction?
Of course, that's one of those kind of reasons. And honestly, gold and silver, we generally term them as anti-risk assets as well. So how to look at it? Honestly, it's a little tricky at this point in time. But again, a direct correlation when dollar is weak, you have metals kind of getting stronger. And that is what you are seeing playing out probably in the immediate short term. Having said that, from a medium term standpoint, do I see any runaway kind of bullishness, especially from an overall base metal perspective? I'm not too sure, purely because of the global growth is weakening, and then there's the problem of probably higher interest rates. Then we may see some amount of pressure coming back at some point in time. Having said that, at this point in time, in the immediate short term, metals will continue to perform because of the weaker dollar on an overall basis.
Okay, got it. Vaibhav, you mentioned a key variable that the rate cannot stand to be softer down the line. And we've seen that earlier also in the FOMC minutes, even for RBI minutes, that they have hinted that a possibility of rate hike could be possible if there would be inflation concerns down the line. Do you see a possibility of rate hike in the second half?
We cannot rule out that exactly at this point in time. It will also depend on how the incoming data is. I mean, if the inflation continues to be pretty strong, elevated, and towards the higher band of the tolerance limit, then probably the central bankers globally, including India, would look to probably act as well. They'll try. I mean, it is it's a job of probably navigating through this scenario, very smoothly. But my sense is basically, I think at some point in time, inflation needs to come down. And given that if there are concerns in terms of the El Nino and monsoon, the food prices is something also needs to be closely watched. If they continue to remain elevated, and our inflation basket is pretty much CPI led in that sense, from an MPC standpoint, then it's looking like that in the second half you may see some action coming there.
Okay, got it, got it. Vaibhav, we've seen that we've started this fiscal year on a strong note. The earnings have turned out better than what the market was anticipating. Valuations are also priced to perfection. But the question is that can this earnings momentum continue? And what are your estimates? What lies ahead? Any earnings growth that you're projecting by the end of FY27?
See, I would look at this way that in the peak of supply chain problems, what we have seen from a Middle East standpoint, and probably one more quarter to see some amount of pressure, especially on the raw material prices. I think the companies have navigated this turbulent time in an exceedingly well or great manner in terms of mitigating any impact on terms of the margins. We've seen absolutely strong revenue growth and of course the profit growth as well. So I'm very heartened to see the earnings profile, especially in the last quarter. And my sense is basically looking at the commentary and the earnings con call transcripts. I think the corporates are pretty confident, from an overall demand standpoint, at least for the next couple of years. Now, in the next quarter, again, as I mentioned, there can be some amount of pressure, especially on the margin due to the elevated raw material prices. But I think it would be the last quarter. And if they are able to kind of deliver those kind of earnings, my sense is basically that we are looking for a good, 13 to 15% earnings growth for the next couple of years. And if that happens, then we will see, PE re-rating also likely to happen on the upside.
Okay, got it. So, how much of a catch up is left in the markets? We're already trading at about 18 times 1 year forward earnings. By the end of FY27, what is your projection for Nifty? Where should we trade at?
Very difficult to give you that number. We have seen always, and it is always good to assume that markets will follow the earnings trajectory over a longer period of time. And if earnings, what we have seen in the first quarter, forget about that kind of earnings growth. But even if we do the 13 to 15% earnings growth, then market should ideally follow, those kind of numbers as well.
Okay, got it. Let's also talk about the AI chase. From last month, we've seen Indian IT stocks have seen bottom fishing, but the AI costing costs, they still exceed the productivity gains. What will be the key catalysts that can drive the Indian IT stocks from here on?
See, I think it's a difficult scenario, to be very honest, and it's not that the environment is pretty clear. It is pretty opaque and clouded in some sense that there is going to be, or in all likelihood, there is going to be, good amount of pressure, especially on the revenue, and which is what this series is talking about, revenue deflation. Now, if that is the case going forward, then and the potential benefits you are getting from the efficiencies of AI needs to be transmitted to the invest or to the clients, then my sense is basically I think we will continue to see the IT sector probably languish, at best, over the next 1 year or so till the time we see strong evidence that AI is actually creating huge amount of opportunities, and thereby the whole story of revenue deflation is something which has been passed. So we will wait for that moment, but till then, my sense is basically we will continue to see pressure, on the whole sector. Of course, in the last rally which we'd seen, it was also due to the extremely cheap valuations and probably free cash flow yields, where stocks were looking attractive. But the sector is grappling more with the revenue deflation at this point in time. So you will see the valuations continue to remain cheap.
Okay, got it, got it. Vaibhav, you projected about 14 to 15% earnings growth by the end of FY27. Overall, any sectors in particular where you think that there is good growth visibility and valuations are also palatable?
No, if you see from the constitution of the earnings profile this quarter and likely to be in the next 3 quarters for this current financial year, then my sense is basically banking and finance, industrials, consumer discretionary. I think all of them are going to, are likely to perform well, especially in terms of, the industrials where they are, their order books are swelling purely because of the data center opportunity. So my sense is, I think we are looking a very broad-based growth and accompanied by cyclicals like metals, commodities as well, which makes us more confident in terms of the earnings delivery. So it's not only one sector specific, it is largely broad-based, and which is why we do think that is a pretty healthy, sign.
Okay. But any key market leaders that will drive the earnings momentum from here on, IT, banks, anything in particular that you have in mind?
Unlikely to be IT, but banks, of course. I think banks, industrials, probably for the next three, or probably not 3 quarters, but probably for the next couple of years, will lead the earnings story.
Okay, got it. All right, Vaibhav, on that note, I have to let you go. But thank you so much for your time and joining us. Wonderful conversation and looking forward to more such.
Thank you very much.
All right, that was Vaibhav for us, taking us through the market structure and on a fundamental perspective how things lie. But for the time being, we are seeing both the headlines.